Very good morning to you, Lagos. It is a bright and beautiful Monday morning here on the Smooth Breakfast on Smooth 98.1. Love music, love life. 32 minutes past the 6 o'clock hour. Second day of March 2026, the first Monday in the new month. We are marching on into what's going to be a beautiful, beautiful week. My name is Ayokunmi Kekirieko, and it's that time to get into the world of business on Business Express, brought to you by Into Switch. And this morning, there are two big business stories for us to actually start the week. By us, I mean Nigeria. And we're looking at oil and economic growth as well. So, just to give you a backdrop here. Now, Brent crude touched $82 per barrel early today. Once market reacted to the US and Israel missile strikes on Iran. Now, those gains have come down to about $72 a barrel. So we wonder, what are the pros and the cons for Nigeria? Also, on the economic side, the National Bureau of Statistics, the NBS, on Friday released GDP growth for Nigeria. Quarter four 2025 came in at 4.07%, while full year 2025 came in at 3.87%. So joining me to discuss all this and make some sense of it all is Precious Bajogun. She's an investment research analyst at P.A.C. Research. Precious, good morning to you. Welcome back into the show. Great to have you.
Good morning. It's good to be here again.
As always, great to talk about what's going on in the world of business on a Monday. I mean, this is how you start a Monday morning. We'll get right
Yeah.
into the business world. And for you out there listening to us, you can join us on WhatsApp and on YouTube as well. WhatsApp number to send your messages to 0911 999 0981 We are also streaming live at Smooth 981 FM Lagos on YouTube. Smooth 981 FM Lagos. All right, Richard, let's start with oil. Looking at what's going on all around the world. I mean, how could the US attack on Iran positively impact Nigeria with respect to the oil prices, first of all?
Positively. When tensions arise in Middle East, especially when it involves major players like the United States and Iran, the global oil markets react very, very quickly because investors start to worry about supply disruptions.
Okay.
A, a key concern in this particular conflict, is the Strait of Hormuz, which is situated between Iran and Oman, and thoroughly at least 20% of global crude oil supply passes through that route daily.
Mm,
The risk of disruption tends to push oil prices higher. So, for a country like Nigeria, which relies very, very heavily on crude exports for foreign exchange earnings and government revenue, higher oil prices can be beneficial in the short term. It increases our export receipts, it strengthens our external revenues, and it
okay.
also improves foreign exchange liquidity, and it boosts revenue allocations across all tiers of government. However, these benefits depend on production levels.
Mm,
Nigeria must produce enough to meet the demand, so they must sustain outputs and also address challenges like oil theft and constraints, so they
right.
can fully tap into any price windfall issues.
Mm. Okay, I mean, as you mentioned, that issue of production, getting the numbers up. I know that
Mhm.
outputs, I think in quarter four, thereabouts was about 1.58 million barrels per day. So, uh, hmm, there's a lot to actually deal with crude oil theft, which is a very, very, very big issue that we're still dealing with
It is.
up until this day. But we'll come back to that. Now, you talked about the positive side. What about the
Yeah.
negative impacts that this conflict could have on us?
Okay, negative impact. So while higher oil prices may boost revenue, the overall impact is not entirely positive. Let me say it that way. So first, we have inflation risk. Nigeria
Mm,
operates a deregulated downstream petroleum system, which means that the government no longer decide on prices. They no longer subsidize fuel prices.
okay.
Things like costs and global oil prices can decide the price of fuel in the country. So, because we operate this kind of system, higher global crude oil prices can translate into higher petrol and diesel costs in the country. So, transportation, food distribution, logistics expenses, they will increase. So, this will place additional pressure on households already facing high living costs. Second, we have global growth risk. If this conflict continues and escalates, uncertainty could slow economic activities in major countries, and so reduce global demand may weaken oil prices or increase volatility, making revenue gains very fragile. And then third, we have trade and capital flow pressures. So shipping insurance costs, supply chain disruptions, they can increase import prices.
Mm.
So because of this, they usually move their funds to safe haven assets, for example, gold, and some of those assets that are regarded as safe during geopolitical crisis. So this triggers capital outflows from emerging
Right.
markets and offsets, the foreign exchange gains we get from prices increasing. So yeah, while government revenue may improve in short term, household may face rising costs, and if this tension persists.
And that is something that households do not want to hear after
Yes,
a very topsy-turvy 2.5 years or thereabouts that Nigerians have had. Hearing that cost may
I
go up
know.
again, and excuse me, that is something that Nigerians do not want to hear at all. At all, we know how oil is extremely crucial to Nigeria's economy, and looking
Nigerian
at the
economy, yeah.
pros and the cons of this brewing conflict that is ongoing right now. Now, talking about the economy, we got some economic growth figures that was on Friday from
Hmm.
the MPS. So it stood at 3.87% for full year 2025, and more
Yes.
specifically 4.07% in the fourth quarter of last year. Would you call this encouraging growth?
Yes, actually. The numbers are encouraging, especially when you consider the scale of all of the economic reforms and the adjustments that were implemented last year. So a 4.07% expansion in fourth quarter, it actually it shows improving momentum, although the growth still remains moderate rather than exceptional. So
Right.
inflationary pressures and weak purchasing power, they still continue to limit the impact of that growth on households. So it's when we sustain this progress that would actually depend on whether that growth trickles down to increased purchasing power in households.
Right. Thank you for sharing that perspective on that. Very interesting
Mm,
thoughts. So let's look at more numbers here. Let's run through some more numbers here. Now
okay.
we're back to the oil part of things, the oil sector. Now it grew by 6.79% in the fourth quarter of
Yes.
2025 compared to 5.84% in quarter three
Q3.
and 2.08 in quarter four of 2024. Now, as I talked about earlier on, output was about 1.58 million
Million.
barrels per day. What's your take on the performance of the oil sector, seen as it was going up and up and up?
Mm-hmm. So this improvement, it shows stronger production stability compared to the earlier quarters, the earlier periods, which was affected mainly by theft, as we said earlier,
Mm.
vandalism, and a lot of operational shutdowns. So producing about 1.8 million barrels a day shows clear recovery momentum, although Nigeria is still operating below installed capacity. So sustaining this growth will require what we've been doing so far, continued security improvements in producing areas, stronger upstream investments, and very serious infrastructure upgrades. So without this consistent efficiency, the country may not really fully benefit from the higher oil prices that we talked about, that would come from this conflict.
And that would be rather unfortunate if we don't take
Yes.
advantage of. of this. I remember the oil boom back in the 70s before my time, but we heard stories and we heard exactly how all that played out. In fact, I
Hmm.
didn't want to go down that memory lane. It annoys me till this day when I think about the possibilities that could have been for
Yeah.
Nigeria. Okay, so we've looked at the oil sector. Let's take a look at the non-oil. Let's juxtapose this. So
Okay.
agriculture, it grew by 4% in quarter four of last
Hmm.
year. It was 2.54% in quarter four of 2024 and 3.78% in quarter three of 2025. I mean, how would you assess the performance of the agricultural sector thus far?
Agriculture recording stronger growth is very positive because it directly affects food supply, directly affects employment in the rural sector. It also
Okay.
directly affects inflation outcomes. It's a very important player in headline inflation. The improvement shows resilience despite all of the insecurity challenges we faced throughout last year, all the logistic costs and climate pressures. However, productivity constraints still remain very significant. A lot of this growth still comes from just smallholder farming rather than all of this mechanized large scale production. We are still
Yes.
lacking in that area. So investments in things like irrigation, storage infrastructure, transportation networks, and access to finance, it will be very important to fully unlock this sector's potential.
Hmm. Now, talking about production, I would
Yeah.
like to, should I say, wrap things up this morning, talking about manufacturing growth, which it was 1.13% in the fourth quarter of 2025. It was
Mm,
1.28% in the fourth quarter of 2024, and it was 1.26% in the third quarter of 2025. This
mm.
is not impressive growth at all. What exactly
No.
is holding this sector back?
All right. So the manufacturing sector still to this day continue to face structural constraints. For example, energy costs still remain very elevated. There's no light, so people have to buy diesel and stuff. Access to foreign exchange for importing raw materials is still challenging.
Okay.
I mean, it was very challenging last year, even though it's moderating right now. And borrowing costs are still very high, especially because of the current interest rate conditions. Um, Weak consumer demand also plays a role because inflation reduces purchasing power, and when people
True.
don't have money to buy things, there will just be supply without demand. So until things like power supply improves, financing becomes more affordable. Yeah, manufacturing growth is still likely to remain quite modest.
Hmm. Okay, Precious. Just on a final note, before I take a message here from Gilbert Musa, looking at the oil sector, looking at the non-oil, and looking at manufacturing, would you call this a lopsided portfolio? Looking at the growth.
A lopsided portfolio. Uh, yes, actually, because Nigeria still depends very largely on oil. I know in recent times we've been trying to move towards taking advantage of the non-oil sector, but oil is still very much a is still very much important to
Mm,
the Nigerian economy. So we
right.
see that the oil sector doing very well. Agriculture has become is growing, um, is doing good recently, and then you see the manufacturing sector um, having no improvement at all. So yeah, I would consider that a lopsided portfolio.
Hmm. Some things need to change, most definitely. We can't keep going on like
Yes,
this. We've talked about this for years. The fact that we're so oil heavy dependent.
oil
It's
dependent.
just
Yes.
let me take messages as we wrap up. So, as I said before, Gilbert Musa sending this in from Festa. Good morning to you, Gilbert. He says it's on record that between 1990 and 1991, during the Gulf War crisis involving Iraq and Kuwait, Nigeria made significant oil gains. A
Mm-hmm.
reminder of what Nigeria stands to benefit presently again by your guest. But the big question is, till date, the 1990 and 91 oil gains are still unaccounted for despite the Okigo panel probe in
Yeah.
1994. I mean, we talk about probes and all that way back when. Till this very day, we're still probing and putting together committees and so on and so
Mm-hmm.
forth. Here we are.
Here
Goodness,
we
goodness
are.
gracious. All right, Tayo in a chat. Good morning to you, Tayo. He says, I'm not upbeat about Nigeria tapping into this conflict, even in the short term. This just means that Ade Dangote might increase fuel costs because breeze between Iran and Israel is tense. Egbodano will
Mm-hmm.
do this one. The light is back to normal, and by normal, no lights. So our oil market should please help me. I know you're big. Let's do something together. Help my life, Tayo. And this is what we're talking about. And you mentioned this thing, Precious, the fact that there is no power. So how do we expect the manufacturing sector to grow when power is
Yes.
still
Very important.
not within reach? There we are, tired. So sorry to hear that. I thought, and I was rooting for you, thinking that everything was back to normal with the power after that period of no light. But don't worry, things will normalize. Just believe. Just keep on believing. All right, we need to go this morning. Thank you so much for the messages, and thank you for being a part of Business Express this morning. Big thank you to my guest in the person of Precious Bajogun. She's an investment research analyst at P.A.C. Research. Precious, thank you for taking the time out this morning. Always a pleasure.
It's a pleasure. Thank you.
All right, do have a great Monday and enjoy the rest of the week.
You too.
All right, thank you all once again. Keep it tuned to Smooth 98.1. Love music, love life. It's the Smooth Breakfast, of course, taking you into your Monday and a new week in smooth style. Don't go